Hey everybody, this is David Skrika. So we're gonna have a very interesting video today. We're gonna talk about maximum pessimism investing. This is like my main type of investing, and this is why the problem with this whole newsletter world is like everything is like month to month, day to day, and as you all know, I do in our email blasts. And remember to always get our email blasts because we have way more of them than what we post on the website, right? So but anyhow, we will do option trading and short-term trading, but this is how you really make money. And this is, because I'm not exactly hard up for money. I want to make this the letter going forward, and this is why I've been stopping and going and trying to figure out what to do. But like I just because the recent trades that we've made that have done very well in the last week or two, I was just like, you know what? This is how I love to trade. This is how I love to invest. And this is what I want to do. And if it means, whatever, not posting as much or not having to do commentary every single day, people can always write me emails, as subscribers. That's no problem whatsoever. So this is kind of what I want to do, and I've been thinking this, and these last two trades that happened in the last week or two, this is what really got me thinking this. And, when I look back on my history, this is how I've mostly made money, and private placements. What we'll talk about now. We're going to do a series of educational videos that we'll, put out to the free list here, and then they'll be restricted to lifetime subscribers. They'll be up for quite a while, like a few months. So we're going to do that right now. So this is okay. So this right here. So this is like one of my favorite studies by a guy named Maybane Faber, who runs a fund. And it shows you, John Templeton used to say, you buy at the point of maximum pessimism. And there's another saying that you buy when there's blood in the streets. And I know everyone always wants to chase the sector. Like, marijuana stocks, I'm from Canada. They were the hot thing in 2018. And crypto was a hot thing in that same year. And, I'll sometimes trade it and do the deal. But like we're obviously .coms back in 2000, but this is how to my point, I really like to make money this way. And it's really quite simple. If a stock goes from 200 to 400, it's going to be probably difficult for it to go to 800. But if a stock goes from 10 to 1, it's going to be probably, for it to bounce back to 2, as long as it's not going bankrupt. And the company is probably a good deal. So this is his study. So this is when you buy a sector, an industry, or a country that's down, 60 to 90% since the 1920s. And the average 3-year returns are, 60, 90, 170 to 240, and then from 71 to 150 or 136 for an industry, and then 107 to 156 for a country. So I'm going to go back and show you, like, one of my first trades in this was a stock called, it doesn't even trade, believe it or not, anymore on the, it used to be just Tata. It's only Indian traded now. So it trades right now at 569 rupees. Okay, but we bought this in 2009 in our newsletter, if many of you remember, because it was extremely cheap. The financial crisis was going on, and it had collapsed. One second, I'm going to go even further back so we can see that. And they'd just taken over Land Rover and Jaguar. And I kind of knew, because Tata, did have, the backing of the government, because this is the largest Indian, car company. I did kind of know that, this is how it would go, right? So, anyhow, if it would hold up, they would get money from the company, from the government if they went under. That's what I'm trying to say here. So this was one of my trades where it's like, I almost nailed it to the T. That doesn't happen all the time. Sometimes you're a little early. I bought it literally at, $3.50 in 2009, etc. Right. So, you can see, that this is the rupee trade. So it went to almost 20 rupees. And then, by 2012, it was over 300. So I think, if I remember, it's a long time ago, but I think we sold it, 25 to 35 kind of range, So, and it had fallen on, 80, 90%. So you also have to just like look at the company and see if it can survive, because that's another big thing as well, right? And the two deals that I recommended, actually, I recommend about the two that have gone up a lot. I've recommended about 4 or 5 of them that are all down like 99%, that did very well in the last few days. Those kind of companies, basically, like those kind of companies, basically, I knew would survive. I was looking at the balance sheets, I was crunching the numbers, all of that sort of thing in them, right? So that's it. And if one of our trades, if a lot of you long-term lifetime subscribers will remember, is HL Toy. So this was the I love telecom companies and maximum pessimism trades, and it's the same kind of thing. They're like monopolies, and they have a lot of debt, which means they're leveraged, so they go down a lot. But there's no way a government would let the telecom company go down, and they're somewhat recession-proof, because even though they have a lot of debt, everyone's going to use their phones and use their data and the whatnot during recessions. So in 2012, HL Toy, I think we got this. This is one, again, we didn't get the bottom. We got in a little early. I think it was around $1.40, and then it rallied to over $7 a share. And Greece, it was the same thing. Greece was down over 90%. Greece was going through the financial crisis, et cetera, all of that sort of things. So that's what happened. And then another, I never bought this one. So when I was just starting out, I didn't really know about maximum pessimist investing yet. I was just in my early 20s. But TIO back in 2001, 2002, during the dot-com bust, this is the Argentinian telecom. It went from over $25 to like 25 cents, when Argentina had defaulted on its debt and had a currency crisis. And then it rallied back to $14, So that's kind of where it is there, and that's one of the greatest trades I've ever seen. It's not around anymore because everything from Russia has been, restricted or banned from trading. And Russian stocks in 1998 fell like 99%, and the Russian index and the TRF, which was the Templeton Russian Fund, was traded at the time. The thing went up like 1,000 or 2,000%. And I remember that was like one of my first big trades. I was 21 years old at the time, and I bought call options on the S&P, and the S&P, went higher, et cetera. And what's interesting, when I start showing you these trades, you'll see that even like since 2009, when we've been this huge, gigantic financial bubble, almost every few years, there's still an opportunity. Obviously, 2009 had everything, which we're going to show you at 2 stocks in a second. But then 2012 had Greece. 2014, again, I can't really show it to you, had Russia. The Russian market imploded, and then did great after that. It literally was a Black Friday. It was Black Friday that the Russian market imploded in 2014. 2015, 2016 was resource stocks. Obviously, 2020, a lot of things fell during the COVID crash. And then right now, we're going to show you a new sector I like. Well, let's talk about these other trades first here. So let's go to, and oil and gas actually was 2020, I would say. Even with everything else kind of rallying after 2020, when you look at oil and gas stocks, because oil went negative, it did really, really well. So, so we're going to look at, let's go to the 2015, 2016. Oh no, I'm going to show you, sorry. Lost my train of thought. We're going to show you the 2009. Now, the stocks that I always kick myself for not buying. I bought Tata, I bought some other things. I did very well after the 2009 bottom. Is the casinos. That's casinos, again, highly leveraged, high amount of debt. You were in a housing crisis. People. I remember going to Atlantis, the big famous casino here in the Bahamas, and I just remember walking through it in November 2008, and it was eerie because no one was there. It was like as soon as that market crashed in October, November 2008, nobody showed up, So, so this is 2009 right here. And you can see Las Vegas Sands goes from, $100 to like $1. And by the end of 2010, so like only 21 months later, it was trading at over $30 a share. So you should basically make 30 times your money at that time. So, and I'm always kick myself for looking at it. Another one I kick myself on, which I didn't do, Ford. I remember I had a bid in at $1, and it just came off $1. The damn thing went to $10. And that's where sometimes, hey, a lot of times too, when you're doing these maximum pessimism trades, you can't worry about picking the bottom. You got to like edge in. You got to slowly go in. You have to do all those kind of things. You have to put your toe in the water, as they say. And you can buy maybe 5 tranches. And if you don't get the bottom, like if your average price had been, I don't know, 2 in Ford instead of getting the $1 bottom, you still would have done pretty fantastically at the time. Another stock which did this, Crocs, the shoemaker, right? A stock that we recently shorted at 125. We covered it at about 108. We had some put options. It was roughly a flat because we lost the time decay on the put options. So anyhow, Crocs, this is a huge boom and bust stock. You can see, it went from $10 to $60 during the financial crisis. Sorry about the housing boom. Then the financial crisis, it went down to $1, and then it rebounded to 30. And then you can see after 2017, when Crocs fell again and back to about $5 or $6, the thing ended up rallying to like $150. So this is one I have on my radar. I don't really want to short it anymore. But like I think that if it were to collapse, to $2 or $3 a share, it could do, rather well at that time, if it were to do that. So let's move on to 2015, 2016. I've shown you HL Toy and Greece. Actually, if you want to just see the Greece index, let's just do that for a second. There it is. You can see in 2012, it went from 25 all the way to 60, and actually even went lower in 2016 and went higher, right? So, I went, doubled in price. So, that's the way to go. Actually, so now let's look at 2015, 2016. 2015, 2016 is kind of when we had the deflationary bottom. Like we had mining stocks, gold and silver stocks, all of these things doing very poorly. And if we go look at, for example, I remember Cliffs Natural Resources. They actually took over a company that I invested in called Consolidated Thompson at $20 a share, and then basically ended up selling the thing. And I think it was $4 billion, and they sold the mine for nothing. But anyhow, you can see in 2016, Cliffs went all the way from $100 to like $1 a share. And then, it rallied over the next, 5-6 years to $30 a share. That's almost a 30 bagger. Another mining stock, these are iron ore companies, was Vale. Vale went from $20 a share to $1 a share, and then went to, nearly back to nearly 20 a share. So, these are the kind of things. I remember recommending a lot of gold stocks at the time. There's a little stock I still like named, now it's called Gokanda. It hasn't done well as of late, but I remember getting it in right here near the bottom at 13, and you can see it went eventually to $1.50 a share. And actually it looks very interesting down here now. Again, I own this. I do have a very small position in it. It wasn't, but I think taking a larger position is now going to be kind of worth your while here. They have some producing mines in Africa. And it's just amazing how some of these juniors are acting so poorly. So 2015, 2016, we'll go look at, let's go look at Franco-Nevada. This is kind of the big one. And, in 2015, 2016, well, it didn't fall as much as the other because it's a royalty company, but, went from $50 to almost 200. Let's look at Newmont. Newmont, you can see, went from $50 to $15 and then back to 70, so anyhow, that's it and whatever. You can see that was the mining stocks back then. So in 2020, we'll look at oil stocks. Remember, oil went negative. Suncor, you can see the big Canadian oil and gas company, which is still cheap right now, by the way, trades at 6 times earnings, went from 32 times earnings, $32 to $10, and then $40, nice 4-bagger. This is a good conservative blue chip, also pays like a very nice dividend as well. And the one I bought at the basket around 12 cents, 12, 13 cents. And then it went to, I sold it too early. I remember, I think I sold it at like 60 or 70 cents. And then, you see where it's done now. Very cheap. This thing trades at like 3 times earnings, by the way. Unbelievably cheap. Of course, I would prefer to see it maybe go back down to $1 or something, but but again, oil and gas, that was the opportunity when, remember, oil traded negative during the COVID kind of crisis. I remember buying silver. We bought calls on the SLV during the COVID crisis. And I remember, again, this is one of the trades where I almost nailed the bottom. We bought them here, and you can see silver, this is not silver itself, but this is the ETF, more than doubled into 2020, 2021. So anyhow, it's like whatever. That's again, maximum pessimism, buying stuff, when it's cheap, whatever. In 2020, you can almost throw in a dart at anything. I got to be honest with you. So, as well. And so again, we have like 5 stocks right now that are all down like 90 to 99%. So the sector I like, well, first of all, we're going to talk about a mining stock, right? So a mining stock I really like is, and look, when I do these consulting deals, I choose out the companies. I get the companies I like. I get the management teams I like. I'm helping the companies do, even if it's not driving volume into the companies. I like to get a market awareness program so people kind of know about them, et cetera, right? So this is a company I like named Inca One, only a $7.2 million valuation. And you'll see the recent press release here. Inca One did May sales of $3.9 million. 79% increase, month over month. So, annualized roughly $4 million is getting close to $50 million a year, right? Say, let's say roughly 48 if you're at 4, 47 if you're at 3.9. Well, what's interesting, $47 million in sales, and the company is only trading at a $7 million market cap. And so Inca One is not a mining company per se. They get all the small miners and they buy the gold from them, and they refine the gold, and then they sell it, and then they collect the markup. And it's a nice little model because only a couple companies do it, and you always have cash flow, and then you don't have to worry about all the dynamics of mining. And mining is a bad business. It's so many things can go wrong, etc. So this is Dynacore right here. And this is the similar company in Inca One's field. And you can see it as a $114 million valuation. And one thing that's interesting about Dynacore is that even when gold stocks did not do well in 2021, Dynacore did. So it really bucked the trend, right? And even pays a small dividend, 4%, 4% dividend. That's a really nice dividend. Only a 7, trading at 7 times earnings. And if we look at the financials here on Dynacore, you can see that this year they're estimated to have, nearly 200 million in revenue. Well, let's say Inca One can do 40 to 50 million. Why is Inca One trading at 1/17th the price and they have 1/5 the revenue? It makes no sense. So Inca One is extremely cheap. It's tough for these small juniors sometimes to get liquidity and volume into them, et cetera, et cetera. So again, I have a consulting deal with Inca One. I have, been paid by them. My family does own the stock. All the disclosure is all there for you. Okay. So the next thing we're going to talk about is maximum pessimism trade that I'm really looking at now is, I'm Canadian. And in 2018, weed was legalized in Canada, and there was a big hype. I did a couple of pre-IPO deals, et cetera, and and that sort of thing. So it's like you can see this. This is a really, really nice move up here, and that was the last blow off in POTX. So that was when Biden got elected, and people thought that marijuana was also going to be legalized in the United States, and it never happened. And none of these companies in Canada can really make money. The costs are too high. The overhead's been too high. A lot of them had to streamline. All the margins are really in, infused drinks, all things of this kind of nature, right? So now, anyhow, so you can see this is completely collapsed from 150 to $7. And by the way, and this is, you know, Canopy Growth, which is the largest one in Canada. And you'll see Canopy Growth, if we go back to when the bubble was happening, you know, you can see it went from just over $1 to $60 a share, and then collapsed. It's now back at it's under $1 a share, all-time low basically right now. And they basically got an issue recently where they had to restate the accounting numbers for a company that they took over. So they have to restate their earnings, and that's always a good thing. And they're probably going to get some legal action and that sort of thing against them. So I do own a little bit of this. You know, my family and me own a little bit of this, very small position. I think I bought, you know, maybe around late 60s, you know, just bought it recently. So you can see though, and this was the poster boy. And by the way, if you ever kick yourself for making bad investments, because we all do it, there's a company called what's it called? Constellation. They own Corona. They own Robert Mondavi, and you can see this has been a very successful company. They put a huge cash injection into Canopy One. I think in like $30 to $40 a share. So how has that worked out for them? You know, so you can see even big companies get caught up in the hype. You know, Ford and Amazon put in huge money into Rivian, which is totally collapsed as well. So what happens? You know, it happens to us all, you know. So I really like the REIT stocks. I've got a couple, you know, I like, and I did an email blast recently on it. And, you know, I don't know if they're going to, you know, fall here, but you know, just fall here. I mean, I bottom here, but I think that they can really, at some point, rally. And like I said, all we need is, if you take back 1/10 of the losses, like if Canopy One, which is basically fallen, you know, from $60 to 66 cents. So it's basically fallen, let's say $59, right? If it can take back, I don't know, 10% of the losses and go to $6, you know, it can, that's a 10 bagger, right? So, you know, and all the other ones that are not in marijuana that I've recently recommended are the same thing. And these are like a streaming company, you know, an online, you know, a cloud company, an online merchant company, all kinds of different kind of sectors. So, you know, I think they're all really, really interesting companies. So, I'm going to leave it at that. I hope you enjoyed this. I hope you learned about a little bit about maximum pessimism investing. I've been meaning to do this for a while. I've just been like editing my book and setting up my consulting business, and I'm setting up a side kind of fun website. So I'm going to start my series on great investors of the past. And I'll talk about John Templeton. I'll talk about Peter Lynch. I'll talk about Jim Dines, a lot of people that influenced me. So I hope you really enjoyed this. Enjoyed this. I'm starving. It's almost 7 p.m. here. You know, and I've had virtually nothing to eat. I'm very happy with myself. I looked up my scale today. About 195. I got up to 205. I'm about 6 foot tall. So I kind of fluctuate between 180, 185 and 205. So when I get to 205, you know, I feel disgusting. And I felt kind of started feeling a little better and a little lighter. And then I got on the scale and I was like, whoa, and I hadn't gotten scale in a few weeks. And I was like, that's nice, you know? So, you know, well, everybody take care and have a great evening.